Hey guys! So today we're going to find out why Cathie Wood sold Tesla stock. When people talk about the amazing price history of Tesla stock and buying and selling influences over the past few years, one name comes up quite a bit, and that is Cathie Wood. This name is unusual in a number of ways. Wood's early investment philosophy and trading activity at Tupelo Capital Management and elsewhere started a domino process where ultimately she became the head of a very prominent set of investment funds under the company name ARK Invest. Now, why is Cathie Wood an important factor when it comes to Tesla? Seen as an unusually prescient market analyst, Wood became famous partially for her ideas about Tesla before that company's massive stock price increase in 2020, its 5-to-1 stock split, and subsequent strength and staying power as the brainchild of Elon Musk. However, Wood really became a familiar name for investors after founding ARK Invest in 2014, allegedly naming these novel funds after the biblical Ark of the Covenant. ARK's funds are well known to wealth management professionals, and their orbit influences today's tech markets. Well, starting with Wood's early pronouncements on Tesla, we can see that one reason she favors this stock is the similarity between the two business models, the complementary ideas behind the development of both ARK Invest and Tesla. Both are built on the premise that rapid technological advance presents a financial opportunity. Both are diversified in this idea rather than focusing on one single technology. They each have a diverse focus and an expansive mindset. However, there's another component to Wood's early investment in Tesla, and that's something that investors also need to take note of. When interviewed, Wood indicated that she saw Tesla as a value stock, in a nutshell, as a stock that was trading under the value of its fundamentals. That means after looking at Tesla's earnings, revenue, and everything else, Wood thought the stock had a lot of room to run, and it did run over the past year and a half. Her early insistence that Tesla had lots to offer the market was part of what led Wood to urge Elon Musk to keep the company public as he pondered a buyback, and a component of why ARK Invest made such a strategic investment in Tesla in the first place. Well, Cathie Wood has made a number of predictions around Tesla's future stock price. Back when the stock was trading for several times less than it is currently, Wood has suggested that Tesla's price could hit $4,000 per share by 2023. Remember, this was before it split 5-to-1, so the equivalent share price post-split was $800, which it hit 2 years sooner than her projection. More recently, in the past months, Wood has revised this to a prediction that Tesla's share price could top $3,000 per share by 2025. That's a little more runway and a little less maximum value, but it still indicates that there's growth potential for Tesla. But then the big question is, does Cathie Wood even own Tesla? Well, the ARK Fund owns Tesla, so yes, Wood's management strategy includes owning Tesla. When analysts and outsiders look at this relationship between ARK Invest and Tesla, it's not just the fact that the fund has included Tesla in its portfolio. It's also how ARK's funds are weighted. A deeper analysis into core holdings show that ARK's Next Generation Fund and Innovation Fund are invested in Tesla to the tune of about 11%. Now, that's nothing to sneeze at, and it's not an insignificant stake for diversified, actively managed funds that are supposed to represent a basket of equities. Also, as recently as this past February, Wood's fund bought additional Tesla stock. Now, with that said, investors find this a little bit confusing considering that Cathie Wood's ARK Invest sold some of its Tesla stock shares not very long ago. Some headlines from past months indicate that ARK Invest leadership decided to dump some Tesla stock. But that wording is somewhat misleading. Actually, it's fairly off the mark, according to more detailed coverage of what happened. Yes, it turns out that the company sold a portion of its Tesla stock, but with a few fractions of a percent sold, the funds are still similarly invested in Tesla to a great extent. Moving from 11% to 10% in fund weighting, for example, doesn't mean you're getting out of some particular market equity. It just means you're trimming a little for one purpose or another. It doesn't necessarily mean that the divesting party is worried about where the stock is going at all. For Cathie and her team, it's very likely that the sale is financing the purchase of other investments that may have higher upside potential. But now we also have to ask ourselves, why did Cathie Wood sell Tesla? The key thing here is that you can see by analysis of the transaction and by interviews that it doesn't mean Cathie Wood is less bullish on Tesla's long-term growth. For starters, that proportional sale was equivalent to just 0.26% of ARK Innovation ETF holdings in the first place. It was reported that the Tesla sale was combined with the purchase of shares of Coinbase. That's along with some investment in Intercontinental Exchange. At the time, Coinbase had just gone public, and this crypto exchange has been an example of cryptocurrency innovation that's attractive to investors. So if Cathie Wood and crew took a small portion of Tesla's stock and swapped that for Coinbase, it doesn't necessarily infer a negative for Tesla. It just means that rebalancing diversification allows for more opportunity elsewhere. Also, over the time that ARK held Tesla, the stock had ballooned by around 800%. Most people don't expect that kind of growth to continue year after year. It's more realistic to expect that Tesla will continue to mature in a more traditional way in stages as its market presence expands. The bottom line is it's clear from interviews that Wood is still bullish on Tesla. So what exactly should we expect from Tesla in 2022? When Tesla's polarizing CEO Elon Musk finally lifted the veil on his plans for this year, there was plenty of red meat for hungry bulls and bears alike. After the close of markets on January 26th, Tesla reported solid results for a company trading with a price-earnings ratio in the triple digits. Earnings were weighed down in part by a one-off tax bill of $340 million related to Musk's compensation package, and the stock is currently set to marginally lower. Gene Munster, the managing partner at tech-heavy Loop Funds, said investors long on the stock shouldn't worry as long-term investment thesis is on track. The headline figure was $5.5 billion in net profit for the past year, which is a record for Tesla and a near eightfold increase. This meant the automaker had finally recouped cumulative historic losses incurred since its founding in 2003, and it prompted Musk to say that Tesla was now a real company during the fourth quarter earnings call with investors. Now, Musk said he would be shocked if his team didn't achieve full self-driving in the course of this year. This would enable Tesla overnight to turn most of its cars already on the road into automated robotaxis, using nothing more than an over-the-air update. Granted, Musk's track record on FSD has proved wildly unrealistic in the past, and many experts doubt existing Tesla vehicles can attain that level of autonomy without serious hardware upgrades. Yet there was a shred more substance behind this claim. According to the company, there were now 60,000 vehicles on U.S. roads utilizing the latest FSD beta software as of the reporting date, up from a couple of thousand in the third quarter. And with Tesla looking to ramp up production, investors should expect an even bigger number of deliveries in 2022. Finance chief Zach Kirkhorn said this year's volume growth, equivalent to more than 1.4 million vehicles in 2022, was not dependent on new plants in Texas and Germany coming online this year. He argued it could be achieved solely from higher output in Fremont, California and Shanghai. But the company already got the approval for Giga Berlin, so basically we're talking about close to 2 million units in 2022. Wow, that's crazy. But we surely don't expect anything else from the EV giant. Well, watch out for Tesla stock this year. If you enjoyed this video, remember to like, share, and subscribe. Stay safe, and we'll see you next time.